Something big is happening today. The Nasdaq is tanking harder than we've seen in over a month. Bitcoin just broke below the psychological 100,000 line, and the government is releasing job data with missing pieces. And the median age of a full-time homebuyer just hit a number that should shock every single American. If you think the economy is fine, today's news proves otherwise. And if you think the American dream is alive and well, stay tuned because the data is screaming a different story. Let's get into it. What's up, family? I'm Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, stay disciplined, and stay ready for opportunity. Let's dive right in. So today's market was a straight red waterfall. No dip, no wobble, a full-on risk-off meltdown. The Nasdaq accelerated losses into the close, dropping about 2.5% on the day and locking in the biggest daily decline since October 10th. So why does this matter? Well, because 2.5% may not sound huge, but for the Nasdaq, that's billions of dollars in market cap evaporating instantly. That is institutions rushing for safety. That is traders saying something feels off, something feels wrong, something is breaking. And the craziest part, stocks weren't reacting to earnings. They weren't reacting to some Fed Reserve surprise from Jerome Powell. They were reacting to data confusion. And that leads to the next story. The White House announced that October jobs report will be released, but without unemployment rates. Wow, let me say that again. We're getting a jobs report without the unemployment rate. Sound fishy enough? Family, the unemployment rate is the heartbeat of the data. The unemployment rate is the headline metric. It is the are we growing or are we shrinking indicator. And today, the market hated that. Stocks dumped, bonds spiked, traders froze because they don't know what they're looking at anymore. The market hates uncertainty. Imagine trying to drive with your windshield covered. That's what today felt like. Here's why this matters. If unemployment is rising fast, the White House knows that will, spook the markets. So releasing partial data creates uncertainty. And in markets, uncertainty is the enemy. Uncertainty kills risk appetite. Uncertainty pushes people out of stocks and into safe assets. Which brings us to the number one safe asset in the world to me, Bitcoin. But not today. Even Bitcoin caught some heat. For the first time in a long time, Bitcoin broke below that psychological 100K barrier and dropped into, the 97 to 98,000 range before bouncing back to 100, 101. But let's talk about why that's important. 100,000 is not just a number. It's a level of confidence. It's a psychological line in the sand. It is a point where bulls say, we hold here because the next leg higher is coming. So when Bitcoin falls below 100,000, it forces the question, are the bears waking up? Are the bulls losing momentum? Right now, here's what I'm seeing as someone who watches the market every single day. This dip is driven by macro chaos. This dip is driven by uncertainty, not weakness. Every time Bitcoin has dipped on confusion, it has ripped back once clarity returns. But we don't know when clarity will return with the way the government's going to happen, the way the shutdown might happen again in months in January. So this 100,000 line in the sand, it could be scary. And here's the silver lining, though. Every dip in Bitcoin's history has been a setup for someone who's disciplined, not emotional, not fearful, and ready to ride and hodl. You already know how we move. Lead.Pray.Hodl. But that's only if you feel the conviction. Nothing wrong with taking some off the top, because it can be painful and honestly heartbreaking. We saw in 2010, the median age, this is a different story, about buying a house, right? It was 39 years old. Today, the median age is now 59 years old. That's not a small shift. That is not a rounding error. That is not the market adjusting. That is an entire generation getting locked out of homeownership. It is young families renting for decades. It is Americans watching prices surge while wages stall. It is the American dream slipping further and further away, which is also why I'm thinking of moving from California to Charlotte, North Carolina. And here's the true depth. If the dream is dying, people will look for new stores of value, new ways to build wealth, new ways to protect themselves. Might be real estate again. Might be Bitcoin because the traditional system's breaking. Even it might be gold. People are getting back into that. They don't care about these crazy political leaders on either side of the aisle. They're caring about Bitcoin being the exit door or the alternative or maybe even the light bulb. You see, this is why so many people of all ages are stacking sats instead of waiting for the housing market to just give them a miracle at 60 years old. You see, the system is changing. The dream is shifting. And the people who understand that shift early, they invest in assets and they wait a decade to see it grow. So here's what today's taught us. The Nasdaq is screaming that something is unstable. Missing unemployment data is a red flag that makes the market nervous. Bitcoin's breaking below 100K was a warning shot, but maybe an opportunity. And the American dream is changing and people are waking up to alternatives. This is why we stay informed. This is why we stay grounded. This is why we stay disciplined and watch this channel every single day for the Daily Hodl. But as always, this show is for educational purposes only, not financial advice. Just a man sharing what he believes to be the truth, breaking down the news, and helping you see what others maybe are ignoring. Family, though, I want to hear from you. Which story hit the hardest for you today? The Nasdaq meltdown, the missing unemployment data, Bitcoin dropping under 100K, or the death of maybe the American dream of home ownership? Drop your thoughts in the comment. Hit the smash button. Hit the bell. And no matter what, subscribe to the channel if you haven't already, and share this with somebody who loves financial news as much as you do. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.